time for our top 10. Coming in at number 10 today, it's Washington Post, up more than 4% now that Amazon CEO Jeff Bezos is personally buying the newspaper for $250 million. Bezos is betting that he can apply his success in e-commerce to the struggling newspaper industry. Stay tuned.
CVS Caremark down nearly 3% today, its biggest decline since June 20th. The drugstore chain is lowering the top end of its full-year adjusted earnings target to $3.96 a share from $4 a share. Okay, not a lot, but they're still going down. CVS new guidance missed the Wall Street consensus by about a penny.
All right, Fossil's number 8. The watch company rallying 18% after its second quarter results beat estimates. Fossil reported an 18% increase in profits as business surged in Europe and Asia. Fossil's third quarter earnings guidance came in below estimates, but the full year guidance was in line.
All right, number 7 is MGM Resorts, up almost 3%. The largest casino operator on the Vegas Strip posted a quarterly profit that beat analysts' estimates. This is thanks to increased consumer spending. MGM reporting big gains in its Nevada operations during the quarter. We just spoke with Jim Murren earlier this hour, and he struck a very optimistic note, Adam, saying that things should continue getting better. He's seen a lot of conferences being booked, etc.
Yep,
so
he sure did.
Hopefully it sticks.
Yeah, that is certainly good news for America, good news for the markets. All right, 20th Century Fox, we'll see if it'll be good news for them, down a fraction ahead of the second quarter earnings report right after the bell. Bank of America raising the stock price target to $38 from $33 on upcoming catalysts, which may include accelerating buybacks and the Modern Family syndication. Again, those earnings right after the bell.
Number 5 is Molson Coors, jumping 6%. The brewer topping profit estimates for the second quarter thanks to, in part, big European acquisition. Molson expects weak demand for the rest of the year, though, and it's ratcheting up marketing of its core brands, which include Miller Lite and Coors Light. And you know what that means, that they're ratcheting up marketing spending and they expect weaker sales. They're going to see thinner margins.
Yes, it certainly would. And, of course, now they're also going to have to contend with the fact that Corona has changed hands. Constellation Brands is going to be putting a lot of marketing money behind that beer, so we'll see what that means.
I'll try and drink as much as possible just to
do your part.
Do my part for the company.
Oh.
Yeah, that's very noble.
So noble, magnanimous of you. All right, number 4 is American Eagle, plunging more than 13% after the retailer slashed its second quarter earnings forecast in half, blaming weak sales. American Eagle says it's cutting prices on clothing to lure in shoppers and try and hit its profit margins.
Dish Network up slightly, even though the company posted a loss of $11 million during the second quarter. The number of total pay TV subscribers declined, and the company took a charge related to a pair of its satellites that malfunctioned during the quarter.
All right, we had Coors Beer. Now Michael Kors up almost 4% after first quarter profit topped estimates amid surging North American sales. The company's strong profit growth reflecting luxury shoppers' continued appetite for posh handbags and clothing and shoes. They do shoes too, right? Michael Kors.
Bucking the rest of the retail trend. I don't know. You know more about shoes than I do, I think.
It looks
do they make shoes? Yeah.
Well,
handbags definitely, clothing definitely, maybe shoes.
I feel like the little medallion though is a knockoff of that New York woman that everybody wears. You know what I'm talking about?
I hear the bell. Okay. That's our cue. Number 1 stock of the day, it's Disney, up more than 1% as the House of Mouse prepares to announce its results for its third quarter earnings after the bell. All eyes will be on how much Disney's big flop, The Lone Ranger, is actually going to cost the company. There are predictions of as much as $100 million, maybe $150 million. Stay tuned for Disney's results. That's coming up for you on Street Smart. All right, we've got a market that's closing lower, 94 points there on the Dow. S&P off nearly 10, a loss of about 0.6%. Of course, concerns that tapering is going to happen sooner rather than later, in part because of that positive trade data that's weighing on investors right now.